Welcome to DF Markets, Relative Strength Index Indicator. The Relative Strength Index is a momentum indicator, known as an oscillator, because the indicator moves between an upper and lower limit. The RSI measures the strength of underlying price swings by comparing the strength of gains against the strength of losses over a predefined look-back period, set to a default 14 period. The indicator is set up with a lower threshold 30 and an upper threshold 70. When the indicator moves to the upper threshold, this signals that momentum in the market is overbought and vulnerable to a reversal lower, while if the indicator moves to the lower threshold, this indicates that momentum is oversold and vulnerable to a reversal higher. In this example, you can see the RSI indicator at work. Highlighted regions on the indicator chart show where the RSI moved into either overbought or oversold territory. Look at the corresponding highlighted regions on the price chart and notice how, once the indicator has turned overbought, price tends to reverse lower shortly after. And also notice, once the indicator has turned oversold, price tends to reverse higher shortly thereafter. One common way of trading the RSI indicator is to fade these extreme readings. Essentially, this means selling once the indicator has registered overbought momentum and buying when the indicator has registered oversold momentum. When trading in this manner, it is important to wait for the indicator line to cross back over the threshold. So for bullish trades, once the RSI has gone below the oversold threshold, only look to buy once the RSI comes back above the oversold threshold, indicating that momentum is shifting. For bearish trades, once the indicator has crossed back above the overbought threshold, only look to sell once the indicator has crossed back below the oversold threshold, indicating that momentum is shifting. Another way to trade the indicator is to trade RSI divergence. Divergence refers to a situation where the moves made by price aren't supported by the indicator. For example, if price is making lower lows but the indicator stops making lower lows and starts moving higher, this tells us that the bearish momentum is waning from the market and highlights the potential for a reversal higher. This is known as bullish divergence and can be a good opportunity to buy. You can see on this chart that price is moving higher, putting in higher highs. However, notice how the indicator stops moving higher and instead starts to put in lower highs, moving in the opposite way to price. This situation tells us that bullish momentum is waning from the market and highlights that price is vulnerable to a reversal lower. This scenario is known as bearish divergence and can be a good opportunity to sell.